Hey everyone, welcome to our FogCutter Live. I'm Mike Curtis here with Preston James, founder of Trader's Edge Network, an options trading legend. This is our post Super Bowl episode, Preston. So we've got a busy week still on the earnings front. Lots to talk about with the volatility we had last week, where the market really was sliding until Friday when we saw that sharp reversal.
Yeah.
Couple things to talk about as far as the broad market, some technical analysis to point out, and then a few things on the economic calendar front as well. Say hello, and we'll get rolling with another busy FogCutter Live episode here.
Yeah, Mike, every so often we'll have a week and it'll get over. And I'll think to myself, if every week was like this one, I'd have to go find something else to do. But it's part of it, right? I mean, it's not going to be humdrum and ho hum all the time. And
Right.
it's just interesting where the market will take some stocks or grouping of stocks, even just aside from all this. Just noticing that the cybersecurity just across the board is just off. It's weak. When have we ever needed that more? And for some reason, Zscaler, ZS, Palo Alto, Cloudflare, CrowdStrike, they're all off. And so what do you do with that? I mean, I don't dive in right now and say they got to turn around just because I thought of it. No, I just think it's interesting to watch because, Mike, what we saw in big time fashion on Friday and some today was, the sector rotation, money coming out of a grouping of stocks going into another one. It just hasn't found cybersecurity yet, but it's on my radar.
Right. Yeah, and there's quite a bit of dissonance between some stocks that are performing well and others that are getting hammered, right? And we start to see, where they're not in lockstep, where typically when the market's trending and we're in a nice solid uptrend, 75, 80% of the stocks are all just kind of moving in lockstep to some degree. They're marching. And we've seen these last couple of weeks where they've just there's been some stocks performing well, some struggling, and we've seen a little disconnect there. And maybe we could just start throwing up a chart of the S&P 500 because we saw about a 200 point drop, right? We were right at that 7,000 level. And Tuesday, Wednesday, Thursday, the market just went into risk off mode, right? The precious metals markets were going nuts. Bitcoin's selling off. It looked like we were going into a pretty sharp risk off type environment. And then Friday hit. And what I really noticed on the S&P 500 was it came right down on the daily chart to that the 100-day moving average. Came right down to that. And Friday, we saw this snap back, pretty strong bounce. And if you also look, it hit that support level from January 20th. So it came right down to the low that we experienced on January 20th, and it just bounced. And you could really just draw a box around the S&P 500. It's been in this 200 point range, going back into December, where we've just kind of bounced around. The higher highs have barely ticked higher. We've just kind of held this range. So what we're watching closely here is if we can either, break out to the upside with some conviction, that could be the start of some new bullish momentum. Or if we get back up to that 7,000 point level on the S&P and we just kind of stall out again. So pretty interesting to see, right? We're getting some follow through on the bullish side today, but what looked like a pretty bearish risk off week really snapped back, really some bullish energy on Friday, and that's followed through into today. So really watching those levels, right? That 6,800 or so level where we bounced and kind of bottomed out on Thursday of last week, as well as January 20th. That's kind of this new support level we've got to watch really closely. And if that fails, Preston, you talk about it, that once a year correction that's just been that 10% correction that on average happens once a year. And we're about a year removed from the start of that last correction, right? So, Preston, maybe you could speak to that for just a second.
Yeah, I mean, I just wish part of me wishes that we knew that the correction would start every year on the second Tuesday of May. That would sure be nice. But yeah, what we know about him, Mike, we average one a year. This is the research from Bill O'Neill, the late founder of Investor Business Daily. Talk about market cycles all the time, how they don't equal the economy. They do not equal the economy. So the stock market sometimes equates to the economy, sometimes it doesn't. Oftentimes it doesn't because the stock market looks forward. And just to your point, Mike, we average one a year since World War II. That's 80 years. Basically, there's a 14 weeks by the time it starts. We don't know. We didn't know that last week, look, it could have been the start of a 10% pullback. What we're showing on this chart here, it not only went 10%, it dipped one day, hit 20%. It was a abnormal size correction. But what's interesting is on average, from the time it starts the correction to the time it goes through the trough and then back up, 14 weeks on average. This one, as severe as it was 15 weeks. I'll give it an extra week to recover from that one. But so we don't know when it'll start. It could be several months more from now. It doesn't have to be a perfect year, but one a year is what we average. And Mike, important to note, it takes 3 out of 4 stocks with it. 3 out of 4 stocks get pulled down and 3 out of 4 stocks recover back, because even if we're in a correction, there might be something where, I don't know, God forbid, we're going to war or something and defense stocks just catch fire and they don't go through a correction.
Right.
So sometimes so not every stock goes with it, but 3 out of 4 on average do.
Yeah, no, that's a great point. So definitely something to keep in mind. And I know when we get closer to about a year removed from that last correction, it just can't help but be a little more top of mind, a little bit more defensive minded. And another interesting thing to point out, Preston, is, the Dow on Friday just exploded higher, broke 50,000 for the first time ever. And then if you go jump over and you look at the NASDAQ, it's way off those highs. It clipped 24,000 back in end of January 28th, where today it's trading 23,200-ish. So you kind of have the Dow, speaks to that dissonance I mentioned earlier. The Dow, we've seen inflows there. NASDAQ has struggled, and the S&P is kind of in between both of them. So we're just seeing a little bit of this disjointed market, I think, as money's flowing and trying to find some different safe havens. The software, some of the AI stocks have really had a rough go. And so we're seeing that in that NASDAQ chart for sure, that some of the money has been kind of scrambling to leave a few of those names.
I agree. One name I'm super interested in for earnings this week, and speaking of crypto, I think it really got pulled down in the muck. You want to talk about a stock that's been out of favor? Pull up a Robinhood, ticker symbol HOOD. And Mike, they announce earnings after the close on Tuesday. So I'm not sitting here predicting I know what they're going to announce or what they're going to guide going forward, but talk about, so here's a stock that's part of the S&P 500. You can see it has not contributed that much for the last couple months to the S&P 500. It's just been completely out of favor. A recent bounce as it looks at earnings square in the face after the close tomorrow. We're recording this on Monday. I love this one for the long term. I mean, you'd have to be a horse's patoot not to be interested in this if you had like a 3-year, 5-year, 10-year horizon. What it does in a week is anyone's guess. This type of departure, I mean, this has gone through the 50, the 100, the 200, Mike. This is out of favor, but if it can get over earnings, and I've got a setup, which I love, which always describes, hey, why this stock and why now? If this can have what we call a surprise factor setup come tomorrow, pardon me, It's Tuesday after the close. So we'd be judging this on Wednesday. There's all kinds of strategies we can lay over on this one. If this one's in play on Wednesday morning, sometimes I like to say you can cancel Christmas, or Christmas will be coming in February.
There you go. Yeah, and on that earnings front, we're still kind of in the thick of earnings season, so busy week earnings wise. Coca-Cola is one that's reporting Tuesday. Spotify, BP, Spotify, of course, really connected into e-commerce. And sorry, Spotify is the music streamer. I'm thinking Shopify. We were talking about that right before going
Shopify
live.
also this week.
Shopify is also this week. So that's a big gauge on e-commerce consumer spending. McDonald's, we've got Rivian, Applied Materials. So it's a pretty heavy week. And then a few more in the AI, Preston, one that we've traded quite a bit, NBIS, Nebius, and the AI software front, Coinbase, again, to follow up on the discussion of Robinhood.
Really hammered.
Quite a few coming our way. And then on top of that, right, coming off a week of just all this volatility, and we're kind of looking at, hey, are we going to take out this resistance level, or are we going to break through the support level? It's good to have your brain thinking about what could drive some of those moves. And we also have the CPI report comes out Friday morning. And there's retail sales this week. So quite a few Fed speakers, Fed presidents, Fed governors speaking throughout the week, which, right, if we've got this changing of the guard coming at the Fed with Jerome Powell kind of working out and the new pick potentially coming on in. So there could be some news on that front as well, where that interest rate policy, the monetary policy, is always such an important driver behind the stock market. So always trying to keep our ear to the ground on what could potentially spark some volatility and drive some big moves one way or the other.
And wasn't there a Super Bowl indicator at one time where if the NFC wins it, honestly, did you ever hear about this, something like this?
I don't think I have.
It was like, if the NFC team won, it meant this, and the AFC, and I just don't hear a lot of chatter about it anymore. Maybe Mahomes and Kelsey and the girlfriend or something just stained all that. But I'll lean on the NFC winning it to
That's
bring us
funny.
something. Hey, just something to point out also, Mike, that APP and Unity, both these stocks got caught up in, along with Take-Two, and it was something else, and it was with that one AI company that kind of rose. Oh, no, it was the Google news that they had some new gaming thing when Roblox got hit also. But Google was going to come in, and these stocks got hammered. And I noticed that Roblox and all these stocks are up today, but Roblox has already announced earnings, but App and Unity have earnings this week. And I would just be interested to show a chart of like APP and just how hammered. So sometimes when news swerves in and there's an earnings coming up, look at App. This is wow. I mean, that just did a number on it. And look at these bounces going on. But again, earnings coming up Wednesday after the close. I'm just super keyed in and extra interested on names like this. And do they have weekly options? Yes. I mean, there can be strategy implications, Mike, this week for some of these names. For McDonald's and a Coke for me, I'm still interested, but maybe not as much. I mean, does McDonald's ever wake up to news that some other burger chain, I mean, they're so established and just decades and decades and decades in. And I guess there's something to lean on for that. I mean, we don't poo-poo companies or stocks like that, but these newer companies that are battling in this space and jockeying for position, wow, sometimes they can really offer up opportunity.
Yeah, for sure. And some of those, it just gives a little broader gauge of just consumer spending and how the economy's doing. A lot of times Wall Street will look at some of those names to kind of gauge, are consumers out? Are they spending? What's the health of the consumer spending market looking like? So
Totally.
always interesting to keep an eye on those. Well, awesome, Preston. Anything else you want to hit on? We got a fun story from Christopher we love to end on. A little motivational story. Someone from the Trader's Edge Network, one of our
Let's do
clients,
it.
had sent in a fun story. So we'll get to that. But anything else before we wrap this one up?
No, I just love getting together and setting the tone for each week. These are fun, Mike.
Yeah, definitely. Yep. So we got, like we said, earnings to keep an eye on, some economic front news to keep an eye on. We'll see this S&P can finally break out of this channel that it's been in. So watching that closely. But yeah, let's jump in. So Christopher sent this in. I love this story. It's just typical of life, right? Sometimes things get in the way. So Christopher said, I started the money press way back in April of 2023. My first trade was shortly after in May. Started small, absorbed the information, took a account to 20,000, which was nice and mostly educational. I love that. But this was not overnight. At the peak, I had about 8 to 10 money press trades going. Life got in the way. And now I'm back at it after the occasional money presses over the past year, using all the tools from prior lessons. And I love how he ends this. He says, one thing I learned is not to overthink and commit to discipline. Because one of the most powerful things about a trading system like the money press is it can take some of the emotion out of it. It can take the individual out of getting in the way or over trading or emotionally trading. You know, this morning, for example, there's a gap down, market was down a little bit. If you panicked, I mean, the S&P was down, I don't know, 10, 15 points, and now whoop, it just reverses. It's up 40, right? So if you over trade, if you panic, if you let the emotions cloud some of your judgment, you can just time things horribly. So I love Christopher's feedback. One thing I learned is not to overthink and commit to discipline. I'm currently running the XLF Money Press and starting small again. Well, welcome back, Christopher.
Yeah.
Glad you had some early success and you're back to keep working on your trading skills and your understanding of the options market. So big shout out to you for digging in and getting after it again.
Yeah, Christopher, appreciate you just sending us that, being a little vulnerable. You know, life does, and how many ways it can get in the way. And Michael, it's just maybe worth it to comment also that it's a strategy too. I mean, yeah, you have to be in it. Things can take you away for sure. But what is nice about the money press strategy specifically is kind of letting each week unfurl and you not having to be there, you know, every 5 minutes or have eight screens up and monitoring every single tick that the market and who's saying what and what do you think? And,
Totally.
you know, so it is a very advantageous strategy for lifestyle, you know, for the lack of time that it actually needs. But
Definitely. Yeah, for sure. And just like you said, letting the week play out. I mean, some of the money press being a bullish to neutral strategy, as we saw Tuesday, Wednesday, Thursday, the market sliding, some of the positions going with it. You know, you start seeing that drawdown, and then boom, Friday, we see
yeah,
that strong rally. A lot of the trades swung right back to where they needed to be and saw a nice little profit for the week. So again, not over trading, letting the system kind of play out is a powerful way to trade. So Preston, thanks as always for the insights. Good stuff. And we will be back next week like usual. So take care, everyone. We'll catch you next week.
all right. Thanks for joining us. Thanks, Mike.
You bet. Take care.